very good morning. That was close. It's 10 a.m. and exactly I can share my screen. Right. And we have a mention of everything that we looked at in the previous class. Right. And as you know, the first 10 minutes, Neha, you were not there in the last class. You were there, right? Offline, you were there. Okay. As we know, our setup now is to first 10 minutes ask you questions. Right. So, who can tell me what are the sources of tax law? Sources of tax laws. Can you tell me? Okay. Okay. Manuals. Okay. What about leaflets and guide pamphlets? Can you tell me a little about booklets? Can you tell me a little about that? Yes, it contains. And what is the opposite of that? Yes, something. Technical guidance. Tell me about that. Situations and also the tax agents and analysts. Very. That's absolutely right. Next is what is the Kunal? Were you there in the previous class? Kunal? Okay, you are on mute. It's your first session. Did you watch the recordings? They have audience in the mind. So they're not able to possibly school. Okay. If you're watching recordings, they will watch. We will watch recordings. Okay, Kunal, see, first 10 minutes, I basically am supposed to spend time in asking questions from the previous class. Okay, so that's why till 10:10 I'll be asking questions. Aditya, tell me what is personal allowance and how much is it? Personal allowance is the amount of tax-free income that the government allows you to they don't have to pay tax on that. 12,570 personal allowance. And what happens if your income increases to personal allowance? Is there some effect? So when income more than 100,000, when the adjusted net income is above 100,000, how much is the amount above 100,000? Half of that, by half of that, the personal allowance is reduced. Very good, excellent. Okay. Tell me a little, Sneha, about what is the order of deduction in personal allowance? We saw order of deduction. So a little on that. Non-savings income. Yes. Examples, can you come again? What are the examples of non-savings? Okay. Non-savings income would be what? Think about it. Trading income. What else? Trading income is okay. One very important. Okay, and employment. This is non-savings. This you are working to get it. Hmm. Dividend. Which one? Non-savings income is again employment income. You have invisible. You have the employment income. You have the pension income here, non-savings income. Again, the ones who are watching the recordings, you can skip to 10:10 a.m. Indian time to kind of know that 10:10 onwards I start. Yeah. Earned income and property income. So earned income is what? Again, I tend to keep, although I know it, I just keep earned income is your employment income, your trading income, and so on. Okay, there's about 3 more minutes to kind of just wrap this up. But in the previous class, these are the topics that we had covered. In the second chapter, we had come to illustration 2 and 3. Okay, Amir's tax liability. All of you just see if you can do this and there's any problem. Amir's tax liability. We calculated this in the previous class, and in 2 more minutes, I will start today's class. See if there's any problem. 21,165 is his trading income, and his employment income is 3,000. So he is doing some trade also, and he is working in a job also. So his salary is 3,000 and his trade is 21,165. Therefore, he gets a total income of 24,165, which is lesser than 100,000. So his personal allowance that he will get tax free is 12,570. So the remaining amount is the amount on which he will be taxed at 11,595. This is lower than 37,700. Therefore, he is charged 20%, which is 20% of 11,595. Look at Tala. Tala has trading income of 43,765 and employment income of 7,000. So Tala has a total income of 50,765. Again, it's lower than 100,000. So you will deduct a personal allowance of only 12,570. So the taxable income becomes 38,195, which is higher than 37,700. So up to 37,700, there will be a basic rate of 20%. And after that, whatever is the excess, there will be 40% interest rate. So the total income tax liability is 7,738. Now, guys, it is 10:10. And let's look at illustration 4 as the first topic for 25th of March. Okay, Kunal, so 10:10 a.m. sharp, we will start. All these recordings are uploaded on the LMS. So please ensure that if you have missed any class, you go and watch it on the LMS. Thomas has taxable trading income of 135,000 and employment income of 33,680. So his trading income is what, Kunal? Trading income is basically that income which you do business. You sell something, you buy something, you trade and you earn. His trading income is 135,000. He has an employment income of 33,680. So his total income is you just have to add up. Imagine, Kunal, you are getting trade also and you're getting a salary also. So your total income every year is 135 plus 33,680, which is 168,680. Now, here, Kunal, what you have to do is if your income crosses 100,000, there will be a reduction in personal allowance. Okay, what is personal allowance, Kunal? This is like money which on which government is not charging any tax from you. This money is for you to keep. Government will not take any tax from that. That is personal allowance. It's money which is not taxed. Government will not charge tax from you. Kunal, are you understanding? Again, this was explained in the earlier class, but I just want to know if you're getting the idea of it. Very good. Now, what we will do is we know that the personal allowance is 12,570. On 12,570, government is not charging any tax. But if your income crosses 100,000, as Aditya mentioned, there is a drop in the personal allowance. It's like if you have an income of more than 100,000, government is saying, oh, you are a rich guy. Why I should not take tax from you? So government is dropping the personal allowance. How much is the drop in the personal allowance? What is the excess of 100,000 that the income Thomas is getting? 68,680. So to this excess, what will we do, Aditya? 50. Half of this excess is how much? 34,340. Correct? So this much, there will be a drop in the personal allowance. But remember, personal allowance itself is only 12,570. Therefore, personal allowance is only 12,570. And now there is a reduction in the personal allowance of so much. Meaning that basically for Thomas, there will be no personal allowance. All of his income will be taxable. Now, Kunal, for your income, there has to be a tax rate, correct? We've seen in the earlier class that the tax rate will be 20% for your income. How much is the tax rate? The tax rate is 20%. So whatever you earn, you have to pay 20% of that to the government. But 20% is the tax rate only till your income is 37,700. Aditya, what type of tax is this called? As your income is growing, the percentage proportion you're paying is also growing. Progressive, yes. So 20% of 37,700. Aditya, remember, if your income is 37,700, up to 37,700, you will pay tax of 20%, which is how much? All of you are expected to sit with your calculator. How much? 7,540, which is clear. But Sneha, after 37,700, also this guy still has money. How much does he have excess of 37,700? 1,31,310. But again, up to how much? 125, 140. 125,140. Up to that amount, the tax rate is 40%. So how much is that amount? From 37,700 to 1,25,140, how much is it? Not 87,770. It will be 87,440. to 125,140. The second rate that will be charged is 40%. Again, Kunal, what is happening is government is charging 20% only till 37,700. After that, government is increasing the tax rate, right, up to 125,140. But 37,700 has already been taxed. So from 120, how much is that figure? 125? 140. From 125,140, 37,700 is already taxed. So how much is the remaining that needs to be taxed at 40%? 87,440 will be taxed at 40%. 87,440, which is 40% of 87,440. How much tax will you pay? 34,976. Then comes again, guys, what did the government say? If you cross an income of 125,000, which again Thomas has crossed, Thomas's income is 168,680. So anything in excess of 125,140, government will charge a tax rate of 45%. Now, Kunal, if you're wondering, where am I getting these percentages from? This is the rule which we saw in the earlier class. So please watch the previous recording, right? But government has certain rates. For this much income, this much is the tax rate. For this much income, this much is the tax rate. And those rules were given, okay, in the previous class. So anything in excess of 125,140, the government is charging 45%, and 168,680 is his income. The excess of 125,150, what is the excess he is earning? 43,540. So for 43,540, the government is charging us 45%. How much is 45% of 43,540? 19,593. Therefore, the total tax liability for this company is, sorry, for Thomas is 7,540 plus 34,976 plus 19,593. Do it in your calculator. The total taxable liability is 62,109. Kunal, you're getting some idea, even though this is related to the previous topic. Are you getting some basic idea? Yes. Okay, now illustration 5 is the same concept as illustration 4. So for that reason, I will leave it for you because I've done illustration 1, 2, 3, 4, test your understanding, all of that. So illustration 5 is the same concept, same logic. So you can try it on your own. Test your understanding too. Maybe one thing I will do for you. Abdullah, I'll do. Personal attention contributions that is given, I have to subtract that from total. And that is why adjusted. Yes. So then the steps will be longer. You will get the adjusted net income. Based on that, you will. But that will not be used as the tax liability. No. Test your understanding too. Abdullah has income from self-employment of 16,336 and employment of 2,500. Now, how much is Abdullah's tax liability? Again, Abdullah has how much? A total income of Abdullah is 16,336 plus 2,500. How much is it? $18,836. So Abdullah has a total income of 18,836, and in this, his personal allowance is 12,570. Remember, personal allowance, Kunal, is always the same. Unless, of course, your income crosses 100,000, then it will reduce a little. But personal allowance is the amount the government is giving to you tax free. The government is not giving to you. I mean, it's your income on which government is not charging tax. So this amount, the government is not taking tax. So you deduct it from the total income, and the taxable income is how much? 6,300 and something. 602. 62, yeah, 6,266. This is his taxable income, and it is very simple and easy. Any income less than 37,700 Kunal is taxed at 20%. So 20%, this is the government rule. Any income less than 37,066 is taxed at 20%, right? Which is how much? 1253.8. So test your understanding too. Again, this is a fairly bigger chapter. But anyway, we'll do it. We'll do it in full detail. One, 2, 5, 3. See, Abdullah, I did. I got 1253.2. Other people, Alice and all that, you have to try on your own. See if there's any problem in understanding the concept. See if there's any problem in implementing it. Try Alice. Now, test your understanding to finish fast. Again, the ones who are watching the recordings also, you need to ensure that you are practicing in this time that is given. Please attend it as if you are attending a live class. How much? 10,766. Aya, you can try it on your completely at home. Now we look at marriage allowance. Now, marriage allowance, when I asked what is marriage allowance in one of the classes, somebody told me marriage allowance is the allowance the government will give you when you get married, which is definitely not the case, right? Certain countries do, by the way. Certain countries, they give an allowance when the citizens get married. They give an amount of money to the people. But here, what does marriage allowance mean? Remember your personal allowance, 12,570. This is basically an amount which is tax free. Suppose my income is less than 12,570. We saw, for example, for children, it's very likely that their income itself will be less than personal allowance, so they don't have a tax liability at all, right? So the question is, what if my income is less than the allowance, personal allowance? It's not necessary that I should be somebody who is making more than 12,570 per year. So if my income is, say, for example, 10,000, right? So I am on that 10,000 not paying any tax. Why am I not paying any tax on this income of 10,000? Because this income is lesser than personal allowance. So government is not charging any tax on my income. But I have an unused personal allowance of 2,570, which I'm not using, which is being wasted. Why is it being wasted? I don't have so much income to deduct it from. Are you understanding the problem? So this 2,570, government is saying if you have another 2,570, that also we will not tax you on. If you don't have another 2,570, that's your problem. But even if you have another 2,570, I will not tax you on that. So what you can do is you have unused personal allowance. Okay, you have unused personal allowance. Again, I don't normally read, but you transfer generally, unused personal allowance is transferred to the spouse or the civil partner. Because remember, I told you 2,570 government will come and say another two, if you have it somewhere, we will not tax you. So maybe your spouse or your partner has 2,570 and you can transfer a part of this personal allowance to them so that for them to that amount, that transferable amount will not be taxed. So you're basically looking at tax avoidance, legal ways to pay lesser taxes. So maybe if you transfer a part of this amount, your spouse or partner will pay lesser tax. That, guys, is marriage allowance. So marriage allowance is not the amount of money the government will give you when you get married. Marriage allowance is basically an amount of tax-free income, an amount of income which is not taxed. Basically, the transferable personal allowance. What is marriage allowance? Marriage allowance is basically when most likely in a situation where personal allowance is not fully used. Most likely in a situation where personal allowance is not fully used. What will happen? We are wasting the personal allowance, correct? We are wasting the personal allowance. Right? For example, if my income is 10,000, right? If my income is 10,000 and say, obviously we know personal allowance is 12,570. Here I am utilizing, how much personal allowance am I utilizing? How much amount I'm not paying tax on? Only 10,000. Yeah, only 10,000 I'm not paying tax on because my income itself is 10,000. So here I am utilizing only 10,000 of the freedom the government has given me. Basically, what do I mean by freedom the government has given me? Government has given me freedom to not pay any tax on 12,570. Now, again, these are my own words. They are not there in any textbook or something. Freedom to not pay tax on this amount. This government has given me. But because my income is only 10,000, I am using only 10,000 of that freedom. 2,570. This amount of personal allowance, which the government has given me is unused, where the government is saying, even if you have another 2,570, we won't tax you on that. So you are disappointed. You are like, I would have saved more tax if I had at least 2,570. I would have got completely tax free. So you are a little disappointed. So what we are allowing you if you are married or in a partnership is a portion of this can be transferred. So the transferable part, a portion or a part of the personal allowance may be transferred to a spouse or a civil partner. A portion, a part of the personal allowance, a part of the unused personal allowance. Generally, I mean, why would you transfer the personal allowance if you yourself can use it, right? So, generally, a part of the unused personal allowance can be transferred to your partner or spouse. This part, this allowance is known as marriage allowance. So, marriage allowance is referred to as the transferable amount of the personal allowance. That's all that you need to look at from the textbook, which I have highlighted. That's all you need to look at. So if you transfer a part of your personal allowance to your spouse, what will happen? Your spouse's tax liability will go down. Here, because you are transferring your a, a part of your personal allowance to your spouse can use it and bring down their taxable income, which is a saving for you guys as a couple, as a partnership. If your partner is paying lesser tax, it's a good win-win situation to both, right? That is marriage allowance. For example, I'll give you a small example, an analogy. Again, I have teaching OCD. Until and unless I don't explain with two, three examples, one analogy, I don't feel that satisfaction. I'll give you one analogy to understand this. How many of you have used mobile data? Kunal, you've used mobile data. If you remember this mobile data example, you will never forget marriage allowance. If you understand this mobile data example, you will never forget marriage allowance. I have mobile data. My wife has mobile data. Okay. If I completely use my mobile data, I completely use my mobile data. My data is zero now, completely gone. But my wife she has 1 point, how many GB data we get? 1.5. Generally 1.5 to 2.5. She has 1.5 GB and she has used only 500 MB, which is 0.5 GB only she has used. Has this situation ever happened in your life where you or somebody has finished the data, but your friend, your cousin, your relative, your sibling, your mother, your father, they have data? Has this situation ever happened? Aditya, Sneha, Kunal, has this situation happened with you? You have finished your data, but your mother, father, sibling, cousin, friend, relative has data. So what will you tell to your relative? What will I tell to my wife? Hotspot, right? So basically, my wife is transferring her unused data to me so that I don't have to pay anything extra and get data. So we are saving on money. She has unused data which she is giving me, which I am using because my entire data is over. That is the exact same concept in marriage allowance. So what analogy is given to you? The analogy is, again guys, if you write this down, analogy, it will help you remember marriage allowance forever. Right? I have mobile data. I completely used my mobile data. My data is zero now. My wife has mobile data. She has 1.5 GB and she has used only 0.5. So she has 1 GB unused data, which she can transfer to me via hotspot. So this in this situation, she is transferring a part of her unused data to me who has used up all of his data allowance. This is very similar to marriage allowance, where one partner transfer has used up all of his personal allowance and the other has unused personal allowance. The partner who has unused personal allowance can transfer a part of their unused personal allowance to their spouse who has completely used up the personal allowance. So I hope this analogy was helpful for you to understand what is personal allowance. Sorry, what is marriage allowance? So electing for the marriage allowance allows the transfer of personal allowance to the other spouse. And a fixed amount of the personal allowance is transferred, which is 10% of the individual's personal allowance. How much is 10% of 12,570? 1,257, which has been rounded off to 1,260. So the marriage allowance that we're allowing you to transfer is 1,260. Now again, I see Huraira in the call. Huraira, you have missed about exactly 30 minutes of class because sharp 10:10 I started. See, we are very, very strict with the timings and with the entire overall agenda. By the way, every Friday you will have one test. Friday on the LMS, one test will be assigned to you. So we are very strict about all these things. So Huraira, I don't know if you're going to understand what I'm teaching now, but make sure these 30 minutes you watch after today's class. Right after today's class, maybe after 1 o'clock, 1 to 1:30, sit and watch the recording. Were you there in the previous class, Huraira?
Yes, sir.
You were there. So, if so far these topics that are on my screen were done in the previous class. All these topics are comfortable to you. Just have a look. Tax is a very easy paper. Because people don't understand it and then they struggle with it. That's the problem with tax. Right? But otherwise, it's just remembering a few things. And with that, I'm going to give one of you one responsibility today. And every week, I'll give one person one responsibility. And we will start with Sneha. Sneha, your responsibility is on a PDF document. You will make a note of important numbers we have seen so far so that on the day of revision, closer to the exam, You have all this as a fast revision. What do I mean by that? Personal allowance, we know it is 12,500. So you will mention that. Then tax rates, you know the tax rates are 20%. You will mention that. Tax rate, the first tax rate is 20% up to 37,700. So you will mention it on the PDF. I mean, I can do this. For me, I've already done it. So for me, it's not something, but I want you to take charge, each of you. So this week, Sneha, 20% up to 37,000, and put the heading so that anybody revising it is clear on that. Along with a brief definition. What is personal allowance? Personal allowance is the amount of income on which the government is not charging any tax. This amount is set at 12,570. So write it. Okay. Tax rates, this is the percentage of your income that the government is taxing you on. And the first tax rate is 20% up to an income of 37,700. The second tax rate is 40% up to 125, 140. The third tax rate is 45% up to, so beyond, over 125, 140. So these are two things that we've seen so far. Then we've also seen a reduction in personal allowance. So you can, under personal allowance itself, you can make a small heading on reduction of personal allowance. Personal allowance, and you can say anytime income crosses how much? 100,000. Anytime income crosses 100,000, there will be a drop in the personal allowance. Okay. How much is the drop? Whatever is the excess of ANI, annual net adjusted income, adjusted net income, sorry. Whatever is the excess of 100,000, that amount there'll be a 50% drop. So put that formula. Right? What else can we put? So because if you remember these small things, tax will be very easy. Very, very easy. What else can we put? This is there. So you see this, just this thing alone is running into 4 pages. If you just know those two things, 4 pages you will be able to solve. ANI. So basically anybody who knows these things alone can solve all the questions that we've done so far. That's all I think. So far, these are the numbers we've seen. This is again, we're on basic income tax computation, guys. We're still doing basic calculation of income taxes. However, now, okay, so Sneha, it is your job. So when can you send it in the group? Today or tomorrow? Okay, I'll be waiting. I'll go through, and then once I approve, you people can have a look at that and have it saved in the group. It's there. Right? So closer to the exam, you can go through all these PDFs, or closer to the exam, one person can compile all these PDFs into one single piece of paper, which is important points for the exam. Important points for you to remember and study. So marriage allowance, I hope everybody is clear. Marriage allowance is 1,260. So again, that too, Sneha, you can make a note of 1,260. This now, again, we will continue to illustration 6. Kevin and Judy, I'll come back to these things, okay? The transferable amount of personal allowance of 1260 is included in the tax rate and allowances provided to you in the exam. Basically, they're telling you that it is there in the exam. The effect of the election is that the transferring spouse's personal allowance is reduced by 1260 and the recipient's income tax liability is reduced by that amount, basically. Okay. Again, you don't need to, I'll come to how we got this 252, but let us look at illustration 6. Kevin and Judy are married. Kevin is employed and has employment income of 35,500. So Kevin is married to Judy. Kevin has employment income of 35,500. Judy spends most of her time looking after their two children but works on a Saturday and has employment income of 6,000. Okay. I'll do Judy later. They do not have any other income. First and foremost, we need to know what is, the taxable income for Kevin. Remember, Kevin has an income of 35,500, and remember, he is having an income of less than 100,000. So, personal allowance will be there as usual. The regular personal allowance, don't look at the answer. The normal personal allowance is 12,570. There is no difference so far. Okay, so his taxable income becomes how much? His taxable income becomes, remember, up to 37,700, I said the tax rate is 20%, and his income is just 35,500 minus 12,570. How much? 22,930. So his taxable income is 22,930 and he is earning less than 37,700. So his income tax liability will be what? Before we calculate his income tax liability, we will look at Judy, the wife. Judy has employment income of 6,000 as per the question. Now remember, her personal allowance is also 12,570. Everybody gets a personal allowance of 12,570, but Judy is not completely using her personal allowance. She is only using 6,000 of her personal allowance. So her taxable income is nothing because everything is tax free for Judy. See, Judy's case, 6,000 completely, her personal allowance is 12,570, but in that only 6,000 she is using. How much is her unused personal allowance? So again, remember, she has no taxable income, so her tax liability is also zero. So Judy's case is closed. Judy, you don't need to worry about. Judy's case is closed. But how much is Judy's unused personal allowance? Unused personal allowance. 6,000 amount, whatever you're seeing. But what is happening? Judy is transferring part of unused personal allowance to her husband. And I told you how much can be transferred. Marriage allowance is 1260. So what Judy is doing is, because she is not completely using her personal allowance, a part of her personal allowance, I told you 1,260, she can transfer it to her husband because her husband has completely used up his personal allowance. Are you all understanding? Right? So here what is happening is Kevin has a taxable income of 22,930 on which he will pay a tax of 20%. So how much is he paying tax? 4,586. That is his taxable income. But because Judy has transferred her marriage allowance of a part of her personal allowance 1260, she has transferred. And now that Kevin can use as a tax saving. He does not pay tax on 20% of this 126. So he saves how much? 20% should be 200 and something, 252. So he saves $252 pounds. Therefore, from 4,586, remember 22,930 is his taxable income, of which his tax liability is 20%, technically meaning he will have to pay 4,586. But because Judy has made a marriage allowance transfer to her to Kevin, he saves 252. Therefore, Judy's income tax liability, it's like Judy is getting a discount. Instead of paying 4,586, Judy is now paying 4,586 minus 252, which is 4,334. 334. So the income tax liability for Kevin is 4,334. And for Judy, obviously, Judy has an income of less than 12,570. So her entire income is tax free. That is what illustration 6 is explaining to us. Judy's personal allowance is reduced to 11,310. Now, why does the question say that? Because we already knew that Judy is not going to use up all of her PA because she has an income of only 6,000. So beforehand, we knew that from 12,570, she will transfer 1,260 to her husband. So 12,570 minus 1,260 is how much? 11,310. So this is now Judy's personal allowance basically. But even that she is not completely using because her income is only 6,000. Even there she has unused personal allowance, but obviously we can't help it. If her income is more than 11,310,
she is using more than 90% of it. She is not using it fully.
Yeah, so in that way, we look at that shortly. But what you're asking is if at all she cannot transfer 1,260, can she transfer a lower amount? Very good. Come over here. I was waiting for this question. There is no provision for transferring more or less than this amount. Are you understanding? So you are transferring 1,260. Yes.
So if she is used more than 11, they can't transfer.
No, because you will not be able to transfer less than 1,260. Are you understanding? So again, this is what illustration 6 is talking about. And I told you I'll come back to where this 252 comes from. See, anybody, any spouse or partner can transfer 1,260 to the spouse. And obviously they will get a tax relief basically on that because they've got a personal allowance from their partner. And they will save 20% of that amount. Right? So the recipient's spouse's income tax liability is reduced by a maximum of 252. So basically the maximum allowance from a marriage, the maximum benefit from a marriage allowance is 252. Because people ask me, sir, can I completely deduct this 1,260? No, you cannot. You will be able to get a relief of only 20% of that 1,260, which is 252. Can we look at test your understanding 3? So guys, this is our index for the day. Katie and Emily are civil partners. Katie is a basic rate taxpayer and her only source of trading income is from self-employment. Emily is studying in the tax year 2023 to 24. Emily makes an election to transfer the marriage allowance to Katie. Calculate Katie and Emily's income tax liability for the tax year, assuming they have the following amounts of income. So I will do A. Aditya, I'm doing A. Katie has an income of 30,000. Following amounts of income. So Katie is getting Katie is having an income of 30,000 and you know that personal allowance is 12,570. This is what it is always. Therefore, her taxable income technically is supposed to be 30,000 minus 12,570, which is how much? 17,450, right? Now, on this, because she is earning less than 37,700, the tax that will apply actually will be 20% to her. So 20% of 17,430 would be how much? Just your understanding 3. 3,486. 3,486. Right? Now again, forget Katie entirely. So that 3,486 is right, but just forget Katie. What we are looking at now is we're looking at Emily. Emily has no income. So obviously her entire personal
It's 11 o'clock.
is unused. So 1,260 of this she can transfer to her partner Katie. So 1,286 is transferred to Katie. So remember, Emily's case, there is unused personal allowance of 12,570 minus 1,260. How much is that figure? 11,000 something we got, no? 310 is her unused personal allowance now also. So obviously, if she has so much personal allowance and she has no income, then there is no taxable income basically. Her taxable income is 0. So her tax liability is 0. So Emily's case is very simple. But 1,260 was transferred to Katie, and what Katie will get is Katie will get 20%. 20% of 1,260 is 252 relief for her income tax liability. So we said her income tax liability is 3,486, but from that, if we deduct 252, her income tax liability will be how much? How much? 3,234. 3,234. That's it. B and C, you people can try on your own. Probably B try in class now itself, and C you can do at home.
So the tax percentage will be 20% regardless of the actual income of the person to which the amount is transferred. So even if
252 it will be.
always
C, yes. So here we have the maximum benefit from an MA is 250. So if the person to whom it's transferred, their income is more and they're in a higher income bracket also, is that your question?
Yes.
Then also the maximum marriage allowance is 250. Try B on your own. And again, as per our timetable, just making a note of the timetable, okay? Sorry, zero. What is zero?
The tax.
Liability is zero. Okay, I haven't checked the answer. What? Done? Any problems? What answer did you get? Check if this is the answer you got. Test your understanding. 3. Did you get this answer? Yes. Okay. Now test your understanding 3C. You can try on your own at home. So marriage allowance, I hope, is clear and comfortable to everybody. Right. So anyway, guys, I'm just making a note of the timetable. This is the strict timetable that we have to follow. So 11:10 to 11:25 is the first round. Then there is a break from 11:25 to 11:35 a.m. 11:35 a.m. to 12:50. 11:35 a.m. to 12:50 p.m. We have the round 2, and finally review session is from 12:50 to 1 p.m. Anyway, so we will now continue with. Now, this is something we will come back to. Okay, but what it says is to be effective for the tax year 23-24, the election can be made by, forget arrears. Basically, in order to be effective, right, the election of the transfer, MA, marriage allowance, can be made by 5th of April 2024. Right? So your transfer will happen in all the future years unless you withdraw it. So until and unless you don't close your hotspot, the data will keep getting transferred, correct? So you can make the election to transfer by 5th of April 2024. And until you don't withdraw the election, the transfer will continue to happen. Just like until and unless you don't close your hotspot, data will continue to go. Right? Then this you've understood election in advance. In advance itself, you say, okay, part of my personal allowance to be transferred to my partner. And until and unless you don't withdraw the election, the transfer will continue to happen. The election is withdrawn. Until that, the election will remain in force. However, you can also make the election by April 5th, 2028. That is, you have time until 4 years. Sometimes you don't know, you don't realize, no? Sometimes You don't know, oh, I have so much unused personal allowance. You can get some tax relief, right? So within 4 years is the expiry date to use that unused personal allowance to basically transfer it to make the election within 4 years. So again, here it's given 5th April 2028 because we are talking about this tax year. But basically, within 4 years of the end of that specific year, we have to make the election. For which, in that case, it will apply to that specific year, basically. Right? So, say 2023-24, you want to make the transfer, you have time until 2028 April. You understand? So you can make a note of these dates. Basically, you can make it in advance itself. You can make the transfer. You can elect. Again, election, please don't panic. What is election? Election is simply deciding to transfer the MA, marriage allowance. Basically, electing for the marriage allowance is basically choosing to transfer a part of your personal allowance. That is the meaning of election. You can do it in advance itself. If you are a well-informed person, you would definitely do that, right? Where you will make the election. Election means decide to transfer the part of your personal allowance by 5th of April of that year itself. Alternatively, even if you forget, there is a safeguard for you. Maybe if you did not elect in advance, no problem. You have 4 years' time within which you can elect to basically transfer the part of your personal allowance. I hope this is clear and comfortable to everybody. Okay, easy. So far, so good. Huraira and Kunal, you're understanding or clueless? No idea what is happening. Clear, very good. Yes, thank you. Now, what are we going to look at? See, income tax liability we've seen. Now, there is also another thing that you need to know, and that is pay as you earn. Now, again, when we are taxed, we've seen various types of taxes, right? And basically, what we're trying to tell you is employment income is basically received by an individual after pay as you earn is deducted. The boss, for example, in Finchartered Academy, before I give salaries, the employer is to deduct income tax from employment income under the pay as you earn system and pay it to the HMRC on behalf of the staff. So, what is the pay as you earn system? Pay as you earn system is I will deduct the tax, the tax that you need to pay, the income tax. Again, say in my company, John works. John has a salary. From that salary, before giving the salary to John, I will deduct his income tax and I will pay it to the HMRC. And that is what you have here in these two paragraphs. Right? So again, this is something that we are going to look at in a lot more detail. Right? However, the employment income figure, which must be included in the the employment income figure, which must be included in the individual's income tax computation, is the gross figure before the payee has been deducted. So basically, in calculating in doing the income tax computation, we are taking, just for the sake of calculation, we are taking the gross figure, the total figure before the pay as you earn is deducted. The individual's income tax liability therefore includes income tax on the gross employment income. To avoid the double payment of tax by the employee, credit is given for the income tax already paid by deducting it from the income tax liability as final adjustment in tax computation. Now, see, income tax liability is, say, whatever figure X. You will deduct pay as you earn on employment income to take out the income tax payable. Again, we will look at this with the help of illustration 7. Akram has taxable trading income of 41,870 and gross employment income of 12,250 for the tax year. He does not have any savings income or dividend income. Pay as you earn of 80 was deducted from his employment income. So calculate Akram's income tax liability, income tax payable for the tax year 2023-2024. So his trading income is 41,870. His employment income is 12,250. So you take the total income 54,120. Nothing new here. Personal allowance is 12,570. So his taxable income is 41,550. Okay. Now, from that 41,550, you know the tax rates are 37,700. 20% of that is 7,540, and the remaining is 3,850. The tax rate there is 40%. So what happens? Income tax liability is 9,080. Right? But until this point, there was nothing new. Income tax liability, there was absolutely nothing new until this point.